Hey guys, in today's video I'll be giving an update on my dividend portfolio for the month of August. I'll be talking through which companies paid me, how that contributes to my growing stream of dividend income, and some possible changes that I'll be making to the content that I produce on this channel, so make sure you stick around to the end of the video to hear about that. To start off the video, I just wanted to address something very exciting for this channel. We recently hit 1,000 subscribers on YouTube. I wanted to say thank you to everybody who subscribed so far, and I think we're going to be really close to hitting our goal of 2,000 subscribers by the end of the year, because if we get 8 new subscribers per day, we will hit our goal. Usually, this is the part of the video where I would mention that only 19% of the people who watch my videos are subscribed, but not today, because it's time to appreciate that 19% who are subscribed, so thank you. And with all that said, make sure to like the video, subscribe to the channel, and let me know which videos you want to see in the comments below. And let's jump into the video. In the month of August, I made $6.07 in dividend, which is nearly a 50% drop from last month. Now you may be saying to yourself, man, something really must have gone wrong in this month if your passive income got cut in half. And I'm sorry to say this, but you're wrong. Nothing this month went wrong. It's simply a function of timing of my dividend payments. Every single month since I opened this account, my total dividends has gone up. I made $1.38 in April, then $4.51 in May, then $4.93 in June, and last month in July, my dividends jumped a lot, and my investments generated $10.64 in passive income. So even though my income was down from last month, it's still my second best month for total dividends. Further, the majority of companies pay dividends every single quarter, but this means that the month-to-month variation in dividends can be very large. So if you're actually trying to identify a trend in your dividend payments, a quarter-by-quarter comparison is better. This portfolio only began generating dividend payments in April, so there'll be no Q1 dividends, but the total for Q2 was $10.82, and so far in Q3, we've already made $16.71. So even though we still have September to generate even more dividends for us, we're already beating our Q2 dividends pretty substantially. Now in this month, due to the timing of when companies paid their dividends, we only received dividend payments from 2 individual companies. To kick off the month on August 3rd, we received our quarterly dividend from AT&T of $4.51. And then on August 14th, we received our monthly dividend from Realty Income Corp of $1.56. If we didn't hold Realty Income Corp in this portfolio, our variability would be much higher, which is one of the things that monthly dividend paying companies add to our portfolio. They provide some sense of normalcy to the passive income generated. Now let's jump into the portfolio composition, talk about which slices performed the best for me over the last month, and discuss any changes that I made. Right now, the total portfolio is valued at $5,197, even after the couple of awful days in the market that we just had yesterday and today. Although capital gains is not the primary focus of this portfolio, it does speak volumes that over the past 2 days, when the Dow has lost 5%, the S&P has lost 5%, and the NASDAQ has lost almost 8%, that this portfolio has only lost 3% in its total value. It goes to show that although these companies will not probably drastically outperform the market when things are going well, investing in stable and relatively safe companies can protect you as an investor from corrections in the market. Over the last month, the portfolio has produced a 4.8% return, including capital gains from share price increases of $215 and dividends earned of $9.49. This dividend earned figure includes dividends that I will be receiving in the future, so that's why it's slightly different from the actual dividend payments that I received. Now turning to look at the current allocation of my portfolio by sector, and nothing has changed since last month. I haven't necessarily taken the time to rework this portfolio over the last month because I feel pretty comfortable where the allocations sit currently. Real estate, which makes up a quarter of the entire portfolio, has a dividend yield of 3.8%, and the companies I feel are incredibly safe. Financials at 18% are also super solid. they generated 2.8 dividend yield with the potential of a massive capital gains in the future because I think right now they're substantially undervalued. And even though tech has been flying high over the past few months, I still feel that these companies that I chose to invest in are still fairly or undervalued right now. So there's no good reason to exit these positions, and they produce a dividend yield of above 3%. All the same good things can be said about the remaining industries I invest in. Healthcare at 14% of my portfolio, industrials at 12%, consumer at 10%, and even our energies and utilities sector, after having Canadian Solar and Renewable Energy Group skyrocket about 30% each this last month. I believe it's good to keep as 6% of my portfolio because these companies are not overvalued in my opinion. When I pick a stock to invest in, that decision should not change if the stock market crashes. It should not change if the stock market skyrockets. I invest in companies that I think are very high quality, and because of that quality, I believe they will provide comparable or above average market returns while generating cash flow for my portfolio, and as evidenced by the portfolio returns over the past few days, they are safer than the general market. Doing the work up front on these investments, yes, pun intended, pays dividends to you as an investor because you can feel comfortable while not having to constantly monitor the companies or the market every day. Now, let's talk about some of the changes that I'm thinking about making to the content that I produce on this channel. As many of you may know, the majority of my wealth is not invested in dividend-producing companies, and the returns that I've been able to generate on capital appreciation over the past couple years has well outperformed anything that this style of dividend investing realistically could. In the channel description, I mentioned that in my other portfolio, I generated a return of 49% on my investments in 2019, and additionally, so far in 2020, my year-to-date performance is at 64%. Now, although I don't believe these numbers are possible over a long period of time, and my recent performance will ultimately slow down, I think I can offer some value to you guys by discussing some of the positions I have in that account, even though most of them are not dividend-paying companies. I want to know your opinion on this because now that I have an audience that enjoys dividend-focused content, I don't want to alienate people by producing drastically different content, but I also want to provide as much value as possible, and I think some is being left on the table. I won't stop the dividend videos, but adding more variety I hope will provide more value for you guys. So let me know what your thoughts in the comments are. Well, that's the end of the video, guys. Make sure if you enjoyed the video, like and subscribe to the channel. It helps out more than you realize. On the screen now will be videos specifically selected for you, so make sure you watch one of those, and I will see you guys in the next video.